Discover matches all the cash back you earn on your credit card at the end of your first year. It's amazing because Discover's accepted at 99% of places in the U.S. that take credit cards. Learn more at discover.com/yes. 2021 Nielsen Report. Limitations apply.
I know you probably haven't traveled in a while, but don't worry. Expedia Travel Week is coming, and you can save 20% or more on thousands of hotels between June 8th and 12th. Expedia, it matters who you travel with. Limited availability, blackout dates apply.
All right, guys, we got about 3 minutes to go. If you're holding on to any of the cryptos, I'm starting to see a little bit of push higher, but we're still trapped in that same zone. It's been at least 10 days now. This is where everybody gets kind of stupid, you know. I think they know where things are going. Don't make that mistake.
Your personal guide to the world of country music. Sign up for YouTube Music Premium and get 1 free month.
Let's take a quick look. We got about, what, 2 minutes? Yeah, it looks like we're going to end up a little bit down this morning in the overall market, but that we don't really give a shit. What we're looking for is to take some profit and to open some new positions based on those scans. So if you've got that scan, let's see, where's that thing at? All right, so you can see that the yellow, you know, you obviously know to stay out of those, but you can see that we have quite a few open positions. Anything that's not colored is not in any of these 3 portfolios. What strategy you guys are using, that's up to you. I'm still using the pullback strategy that we've used on all small accounts under 100,000. Don't make the mistake of putting too much in. You don't want to max your shares out at the top. You want to have as many companies as possible paying you dividends. But we'll see what happens here on the opening. Hopefully a few of those trailing stops that we've had in, we'll go down through the list here because I don't know if it's actually going to be a quick or slow opening. Numbers on jobs, unemployment was down, so who knows. You know, I don't listen to any of that crap really. I mean, it doesn't make a decision. I don't make decisions off of it, and you shouldn't either. All right, so pretty. Let's go back over. You can see everything went a little red, but let's see what happens. This might be a good opportunity to DCA. We'll see if it comes down. Now, your order should already be in if you're using this strategy. The other strategy is wait for it to come back up on the scan, but that has its problems. With larger accounts, it's not going to be an issue, but with smaller accounts, you don't want all your money wrapped up too quickly. You know where your average cost is this green line. Now, all platforms are different. Some of the platforms I don't like because, especially TD Ameritrade, I mean, their charting is really lacking as far as entry positions. I mean, you can get it to work sometimes. E-Trade's another one. They're good for the person that's working. You know, doesn't have the time to monitor their charts. They can just put your orders in, and you know, if something activates, you take the appropriate actions. Either put your sell limit in or a trailing stop, whatever you're doing. But yeah, there's several different ways to approach it. But we got a few positives here. Looks like oil's kind of edging up higher. We got into that yesterday or the day before. I can't remember. Got more into it. We only have what, 17. I don't even know what the max shares is on. Let's take a look. It's one we've been involved with a lot in the past, and it's just now. It hasn't come back up on the scan yet, but that was a 50% retracement pullback that we had a trailing stop on, or a trailing buy order on. So we're still only at 17. Let's take a look at the, yeah, it's 32. So we got a little ways to go. We're about half in. But yeah, nothing yet this morning. Let's take a look at the cryptos and see what's happening there. So we got a target of 41,559. We'll buy back in at 36,979 on Bitcoin, sitting right in the middle. Ethereum, get a buy in at 2605. Target price at 29.85. No idea where these are going. Litecoin 174 was a buy. We're looking to sell at 224. Again, right in the middle. Very, very slow or very low volume, low volatility. A lot of people are getting chopped up. You don't want to be one of those people. Your scale ought to be based on the size of your account. Don't be getting crazy. Don't think you know where it's going. These charts mean nothing. Don't look at this stuff. It doesn't mean anything. Right now, where the price is at is where it's at. You want to try to profit from the move up, of course, but you don't want to be shooting for 1,000. I mean, you're going to be waiting a long time. Sure, your reward's going to be great, right? But nobody knows for sure that that's where it's going. So why not, you know, if you were buying on the way down, you can be selling on the way up. That's the whole trick. So if this sucker moves back down, we want to buy at 553. It's got to come all the way back down to right in that area. Correlates to the bottom here, doesn't it? And let's see, so Litecoin. Yeah, nothing going on there too. It might be a light day overall, but who knows? I don't know what's going on in the media, but let's take a look. We haven't established any new positions, but what did we have yesterday? I think we only had the one WHF. But yeah, the dividends for today, 857. The accumulation dividends, that's what still has to be paid to us, 223.58. And we have no sells, and there's no ex-dividends tomorrow. So usually the start of the month is where you're going to see, well, this is last month, so I hadn't updated it, but you'll see usually in the start of the month, you'll see your dividends pay out quite a bit, especially the monthly payers. Of course, quarterlies don't pay every month, so you're not going to see this change. So things vary. Just keep that in mind. But the whole idea is to keep targeting, a minimum of 1%. 1% equals 12% per year. That's the minimum, right? So if you're taking trade profits as well, you can increase this. Now that's all dependent on market conditions, right? So you can see some days here we had 177.19 and see 154.59. So it just varies, those are the high days. You can see the last day of the month, or last trading day of the month was a zero, right? Everybody going on vacation. What'd you expect? Nobody's trading nothing. Nothing's moving. So you just hold tight. Let's see if we got any. Usually takes about 15-20 minutes for algorithms to get all their orders in, and you can see where the market's actually sitting. But you should already have your orders placed. You shouldn't be making orders unless you either hit a alert where you can therefore buy on the limit, or you can do a trailing buy. Basically, that's your two options. I don't use market orders because on dividend paying stocks, you don't really get too much movement on your spread, but you don't want to be paying $15 spread. Now, obviously, if you're doing small, if you're going small like you should be, under 100,000, this is how you're protecting yourself and you don't take losses. So it's the same thing. If you had 100 shares of one stock and you had 100 stocks with one share, it's the same thing, but you spread out your risk. People don't get this, but what is it? 100 shares is like the default on all platforms. Over the last 27 years with Interactive Brokers, they've changed those settings where you can put in whatever you want. It's the most versatile platform out there. The only issue with it, and they're never going to drop it, which I don't really care. They have a dollar commission per side on the trade, but the platform is, I don't know of any better. Now, obviously, if you're trading on any of the other platforms, you get free everything, right? No commissions as long as you're doing equities. You start getting into your options trades, yeah, it's going to start costing you depending on how many legs you have. Let's see what the overall market's doing. ES is down. Looks like we still got some buy orders. Let's check out these. See, BBN, back to the portfolio. CMS, that was the guild we were just looking at. You can see we picked up that yesterday. I guess we need to annotate the chart here. Now remember, I don't use Fibonacci, okay? Everybody keeps asking me, well, do you trust the Fibonacci? It's like, it's a tool so I can make this drawing on here. I don't use it. I'm not a Fibonacci, whatever you want to call it. I just use it because it's an easy tool. I don't have to pull out a calculator to figure out the 6 months, right? From here to here, that's a 50% mark. I mean, if you want to pull out the calculator, it's like, this is my mean. I don't go up here. This is what Fibonacci guys do. They go up here, maybe they buy on the pullback. I don't know. I mean, it doesn't make any sense to me why they do what they do. None of it ever proves out to me. I mean, if you got a 50-50 chance of it working, then what's the point? I mean, if you can tell me it's 99% effective, yeah, I'd be all over it, right? So would everybody else. What it comes down to is knowing when to take profit and understanding the range on these charts. If we look at this chart, WHF, right? The profit that we're looking for is what? Oh, looks like we sold OXLC. So let's take a look. I'll come back to this. I'm gonna write that down or I'll forget it. WHF. And take a look at the profit. And see which one that was on. There it is right there. Oh, must be on another account. That one's still floating. Where'd it go? There it is. See what the trade profit was, 1107. All right. Go to the chart. I'll annotate this one. I'll post this over on Twitter for those folks that are at work. Nah, it's not Twitter. What are we doing? OXLC. All right. Well, what the heck? Did it not totally close out? Oh, wrong chart. Let's look at the right chart. There we go. There we go. Save. All right, here we go. AJG. We're right at the 20-minute mark, right? We'll come back to that in a second. Let me get this sorted out. XLC. Yes. All right. Sold OXLC. And what was our profit on that? Oh, 10.9, huh? Profit, 10.9%. Not too bad. All right, we'll clean that up. I don't think that's on the scan, so we'll check it. No, not on the scan. All right, so AJG, check that scan again. There it is, right? So we're going to annotate it. Now we'll go and find it. That's 3, so we're going to put it on. It's an odd account. AJG. Okay, I guess I need to get a chart up. Okay, so with this pullback strategy, remember what we're going to do here, right? We need our chart. All right, AJG, so it's 144. 69. So it came down and hit it and then bounced a little bit, right? So the yield on is 1.3%. We got a dividend of 192. We notice we have max shares of 20. All right. So under 100,000, what do? 10%. We can only do 2. Okay, just stick it on one account, doesn't matter. Do 2. We're going to trail this because we're using a trailing strategy. Now what I like to do, it shows a dividend amount. Oh, it shows a dividend amount of $1.92, right? We're going to go 182 to try to get it up under, and that doesn't look good enough to me. So we're going to, if I can get it to activate, we're going to go 174. Let's go a little bit lower. 166 trail. And if you notice, 146.51 and 146.41. We want to try to be in below what that close was of Friday. You'll see this on a lot of, well, almost every one of the charts that I post. Okay, so we're just going to add our, well, we can't put the fib on there yet because we haven't activated. We don't know where our mean is. This thing could drop tomorrow or go up, hit, and then we're just looking to profit and take out. So the number of occurrences, this is where it's at. You have to get the number of occurrences up. This is how you play this game. This is how you don't get trapped. See, all these guys that want to, you know, got some people that get mad and say, well, I want to, you know, I can't make any money, you know, doing, you know, two shares or something. I said, well, I mean, what's the size of your account? Do you know what the size, how much you're risking? If you can buy all of these, right, then you know how much you're going to make dividend-wise if it's on a quarterly basis. If they're all quarterly, there's actually only one RMI in here, and you would buy that on the close on Fridays when you follow these charts. Okay, so RMI, we'll take a quick look at that because a lot of people don't understand what a CEF is. If you look down at the bottom on this chart before I close it out, it shows 45 cents, 48 cents, and 48 cents. That's per quarter. Plan on, if you buy something like this, plan on owning it for life, right? That way you're not surprised when the price comes down and you're not sitting there with 500 shares or 100 shares because you're playing way over your head. Under 100,000, keep your max shares at 10%. So here, RMI, this is paying monthly, right? Should be coming up here shortly. We're already in, but because it's on the scan, we've already highlighted it in red, so we don't make the mistake of trying to buy it again. So if it's above the green line, you just forget about it. You already own it. Now, the two strategies that I talked about earlier, you can either do it on the 50% pullback on the 6 month from where you bought it. So we bought it over here somewhere. We didn't buy it, you know, you can't really see it. You have to stretch this chart out. Now you can see where the bottom was. Right? You don't change your charts once you're in. These charts mean nothing. As far as these candles, it means nothing. It's just price movement. I'll get back to that WHF to talk about that. Really slow this morning. What else we got here? So, okay, so you're making monthly dividends, and these occurrences are happening quickly. So every 30 days, these things are paying you. Once you're actually in them, you might be in them for years. You know, who cares? Something like this. Let's take a look at what RMI is paying. These are going to be higher yielding, but don't be fooled. You need to understand the difference between yield, right, and what you're actually being paid. So 4.8%, and it's paying $1.10 per year per share. Now we can go up here to PSB, and it's 2.7%, but it's paying $4.20 per year. Now, which one would you rather have? Well, it's not a matter of which one you'd rather have. It's just this dividend amount is greater than this dividend amount for the same time period. right? So this is why you spread your money around. You don't just target one thing just because, oh, well, I see that's like, 4.8%. Well, that's higher than 2.7. You have to understand that price influences this percentage. Don't fall into that trap. The yield is good to look at, and you can trade off of that, but know that the price has a lot to do with that yield. But that's easy stuff there. You can figure out your math on that. So still no losses. We've been positive. We like that. Only had one buy so far on this account this week. We definitely need some more positions, but this market keeps going higher, and the only way we're going to be able to do that is with trailing stops. Or you can. I just don't want to get in too many positions when the market keeps on floating higher like this, because we don't know when this sucker's going to come down or some world event's going to bring it down. Nobody knows. So you just have to be prepared. Make sure that you have cash. So this particular account is sitting with $9,900 to go back in on a size account is this. But this one's only a total of 28,000, right? So you've got almost 30% in cash. Does it sound familiar? Somebody like Warren Buffett sitting on a ton of cash, right? So you just have to scale your account size down based on how much money you have. So when this thing goes down, you'll be able to buy more at lower prices, which is going to double your income. The same thing with this account. Yeah. NASDAQ's down big, but that's pretty ordinary nowadays. All right, let's go back to the mosaic, see if anything's changed. HCAP, it's been a dog for a long time. I think it stopped paying dividends at one time. Maybe it's starting to recover or something, I don't know. But you can see by the size of the position at 153, that's probably max shares. There'd be two reasons why you wouldn't buy anymore, whether you're above your average. Don't fall into the trap of dividend reinvestments. Because if the price is going up, now you're going to start losing money if you're buying more shares above your average cost. If you can't manage these small accounts, there's no way in hell you're going to do a big one, because what will happen is the amount of dividends that are coming in will degrade your position if you're using drips, and people don't get it. The market's been going up for 10 years, and people on these drip plans are losing money every quarter or every month. They just don't get it. Yeah, they're buying more shares, but oh boy, when that sucker comes down, your average cost is way higher than it should be. So it's too bad, because these portfolio managers, they don't give a shit. They're going to make their money based on the size of your account. They don't lose money. Let's see. Yeah, it's like this account right here. It needs some more positions. But see, we're not going to force this. Either you're going to have more positions or you're going to have more shares of something. So if this sucker comes down and hits this alert, and we'll put another order in there, pick up some more shares. All we're doing is doubling the amount we're making. So focus on those things. Managing your account is more important than, hey, what type of indicator are you using today? I've listened to this for so many years. So many trading platforms out there that says, oh, we've got over 200 indicators. It's like, oh, which one works? None of them. I guess they call them trailing indicators, because it basically it's a mind screw, because if something is going up, anybody can figure that out just by looking. Well, the price is higher than it was before. Why do you need something as an indicator that says, well, if it crosses this line, then it means something? It doesn't mean shit. It can go straight back up. It's all about money management. And then how do you go big? Do you go small? Or how long do you have to wait for it to cross that line before you do something? And then you're chasing your tail. So it's as simple as getting money in the market and then getting paid. A lot of people argue with me about growth stocks, and I'm like, well, I mean, you can do growth stocks if you want to, but you're going to get trapped with them. But what are you going to get? What are you going to get paid when the stock price goes down? Probably not very much. If it doesn't pay dividends, we're not interested. Keep that in mind. It's definitely a different mindset, and if you start out small, I mean, there's people that I've taught that have over $500,000, and they totally get it and said, man, I could have had so much more money, but how much is enough? Like they're talking like, I could have had $10 million, and I was like, you've been using a calculator or something? Going back in time, looking at their statements, and they're saying, yeah, I lost a ton of money from stops. Stop loss. I don't use stops. You need to understand what that means when you lose money. How long does it take you to recoup it? If one of these goes under, yeah, it'll be a loss, but any company that's making dividends or any fund that's paying dividends, what are they doing? They have to be making money. Tesla might be, I don't even know what it is right now, $500, but what's it paying you? What are you going to buy, one share? I don't even know if you can do, I think that they're trying to get people, I think you can do fractional shares now. I seem to remember seeing something about that. Of course, we know Bitcoin, you can do fractional on that, but I think they pay you in dividends. I don't know that you can buy fractional shares of Tesla. Don't care, because I would never buy it anyway. It would never come up on our scan. But the banks are just, man, they've been horrible for years. Not doing anything. This thing been hovering around, 53 to 61, $8 range for, 3 months? It's gone up, but I don't even know what bank this is. There's another one here, Bank of Hawaii. These are ones that came up on the scan, but they pay a decent dividend, right? $268 per year. Let's go back to the mosaic. It's just so much easier to look at the mosaic and then, figure out. Get it to act right here. There we go. HFC, we looked at that earlier. Notice I'm not making any predictions. You get that out of your head. Just accept what the market's going to give to you, because this thing could go down tomorrow, right? And so what's your prediction then? It's going to go back up? It's a 50-50 bet, right? And we don't bet. We're just making decisions on how to manage money and how to take money out of the market. It's simple. We're working on 363 days without a loss. The last loss we took was a fund that folded. I think we lost $100. Whatever. I mean, what's that percentage of your portfolio? But well, let's say you had Tesla and it goes down. Let's say you bought 100 shares, so it's 50 grand, and you're sitting there and it goes down half. Well, what can you do at that point? You're going to sit and hope, right? You're going to hope it goes back up, and you're going to hope it's going to split. You're hoping it's going to do this. You're hoping it's going to do that. And next thing you do, you're like, I'm not making any money. So what do? You sell. But what most people do, they say, well, I want to sell before it goes down too far. So they have a predetermined line in the sand. Say, I only want to lose $1,000. Well, you'll probably lose it. But what do they tell you? Make sure you go 2 for 1. If you're willing to lose 1,000, make sure you try to win 2. All right, it's the old 2 steps forward, 1 step back. It doesn't work like that. If you understand probabilities, if you buy something at 500, is your probability of hitting 510 better than hitting what, 495? No, of course not. 495 is easier to hit. It's just a probability. It's just a numbers game. And as soon as I don't care what anybody tells you, you put a stop in there, you just telegraph that to everybody in the market. Anybody that's watching either level 2 or level 3, they'll come after it. I don't have to worry about taking losses like that because I don't put stops in. But then again, small accounts, larger accounts, it doesn't matter. Money management's all based on the size of your position in each company. Yeah. Whew. PRK. Let's get this thing changed around. Banks moving up a little bit. Banks and oil. Let's get this, see all of them. Everybody knows what Procter & Gamble is.
YouTube music is playlists made for any market. Choose your vibe or activity on the redesigned homepage and get custom playlists mixed just for you. Explore YouTube music today.
That one hadn't been on my radar in a while. Too, when you've got a bunch of positions, I mean, I think overall, all the accounts that we manage, we probably have over 2,000 different stocks. I mean, it's just stuff that's been sitting in there, but what is it doing? It's paying you, and if it's not paying you, you can look here. Let's see which ones are not paying us. Because we won't put any more money into them, obviously, but we're not going to sell them either. Well, we'll sell them if we can, get them at a profit. But something like, what's this one here? CTBI. I'm trying to find one that's not paying dividends. Here's one that, well, HCAP I was talking about this earlier. You know, it's not really paying enough dividends, so therefore there's nothing for us to do. It's got 153 as a max share. Yeah, and you can see where the okay, we just sold COP. It's ConocoPhillips. Check that out. And that's on this one. 351. All right, so we'll take a shot of that. Send this over to Twitter. What the heck? And what did we get on that? 2.9. All right, so same thing. Before I do that, let's just make sure COP's not on the scan for this week. So we'll just get this stuff off of here. Reset. All right, so you don't have to worry about it again. Go do something else. I got a bunch of analyst ratings. I don't listen to any of these, but Interactive Brokers sends them out all the time. Yeah. I'll go back to the mosaic. Now, ideally, what you'd like to have happen is you, in an ideal world, market's going up and you're just selling out of all your positions, right? And you just happen to get out at the top with all your positions and you're all in cash. When the market starts coming down, you can be buying, right? But when are you going to buy? So you know that some of these positions are going to stay on the table. Therefore, the idea is if your positions are small enough, you can be buying more when the market comes down. This market may go down slowly or it might crash hard. We don't know. But the whole idea is you have to have a strategy on how to pick up more positions or more shares of each position so that you can benefit from it. So you can be, instead of just, you're probably not going to be trading for profit. You're probably going to be buying for dividend profit to increase your profit. So if you had 50 positions that were, let's just say, paying you $1, so you're making $50 a month, and the stock price comes down 50%, but you're going to buy an additional share in each one of those. Now you have 50 positions with 2. So you just doubled your amount of dividend income, right? So what happens to your yield? This price comes down, the yield goes up. It's pretty simple, but nobody looks at this. Nobody teaches it. This is how Warren Buffett became a billionaire. It's not rocket science. It's just when you have a market that just keeps going up, obviously, you know, unless something, what do you call it, splits, you know, you're not going to benefit from it. I mean, nobody really realizes how he got so rich, too. I mean, the splits on Coke, like he had 2 or 3 splits on Coke. Maybe he had 100,000 shares and split once. He had 200,000 shares. Or I'm sorry, 200 million shares, And 100 million shares to 200 million shares, and then split again, so he had 400 million shares. So he makes $150 million a quarter in dividends. I mean, he doesn't just invest in one. When you got that kind of money, if you looked at the percentage of his money, you'll start to understand what we're doing here at the lower level. It's not rocket science. And I don't think he's the brains behind it. I think Charlie Munger was the one. How's that thing coming out? I don't know if there's reverb on there or what. Well, hopefully we get some action, but then again, if we don't, we're just collecting dividends. No worries. All right, let's take a look at the crypto. See what's happening. Nope, I want to do that. Bitcoin, same spot, not moving. This is why you don't want to stare at charts all day long either, because you can't will them to go one way or the other. All you're doing is looking to see, basically, did you sell something? Did you buy something? And if you've got alerts, use them. Have it send you an email. You don't want to sit here looking at this stuff all day, because we're fixing to wrap it up here. We're a little over on time. But I wanted to get that at. I was talking to somebody. Oh, Madoff. Yeah, we were talking to Bernie Madoff. And all these people that are telling people to hold, I mean, it's what classically, when all new traders get into the market, this is what they're told. Get in and hold, buy and hold. That's the only way you're going to make money. Because if you buy and hold, it could go to $1 million and then you could be a millionaire, right? Typical. This is what normally happens at the end of a cycle. When you start hearing this more and more, especially in stocks, and Warren Buffett talks about it a lot. He says, what does he say? If you're not holding something, then you don't understand what you bought. I mean, he sells all the time. If that was true, the only thing he does hold is Coke. He's held it, the same amount of shares, I don't know, for 15 years. I mean, I would too if I was making $150 million a quarter. That's $600 million a year. Is he ever going to run out of money? So you have to be taking your profit to build your position. You're never going to make it. Just, the dividends are good. Yeah, if you want to use the rule of 72, 10% take you 7.2 years. It's just an approximation. But yeah, we're not getting any. We need to see some, hard movement or steady movement up. But maybe we will, but I'm just not seeing it yet. All right, well, I'm going to call it a day. I got some things to do, and I'll be back this afternoon for the close. If you got any questions, shoot me an email over at T1 Recon Rider, T1 Recon Rider at gmail.com, and we'll go from there. Anyways, have a good rest of the day, and remember, don't take losses.